Good morning and welcome to the June webinar. My name is Jonathan Howard. I'll be your host today. Our topic today is how to trade with a trend. We've all heard the old adage, the trend is your friend. We're going to talk about how to do that today using our leaderboard product. Here's a quick disclaimer. And for those who don't know, this is Leaderboard Free Access Week. Everyone's got free access to Leaderboard all week long. Go to the homepage of invest.com, click on the top where it says free access. It'll take you to a registration page. Click on it. All we need is your name and your email, and you have access to Leaderboard all week long. It's a very, very powerful tool, and we'll talk about today in the webinar how we use it to trade the trend. Our featured speakers, we got Mr. Chris Gessel, who's our Chief Content Officer, and Mr. Ken Shreve, our Senior Markets Writer. Good morning, gentlemen.
How you doing? I'm Chris.
Good morning, Jonathan. Good to be with you. Ken Shreve here.
Our agenda. Well, first things first, let's talk about the market. We know it's been an interesting couple of months in the market. We've had a nice strong pullback, a little bit of a rally, a lot going on. We'll talk about that and what it means as investors. More importantly, what do we do when the market outlook changes? When we have a correction or an uptrend, what are our strategies? What should be our action plan? We'll talk about a couple of those today. We'll do a tour of Leaderboard, talk about how it can help, and we'll end with some stocks on our Leaderboard Committee's watch list. We'll hopefully walk away with some actionable items. So let's first start with our market update.
All right, so the title of this webinar is Trading with the Trend, and I think this is a great few months that we've had since last October on how important it is to be in sync with the trend. And I was looking something up where you see that we put the market under pressure when it undercut the 50-day moving average, and that was on October 4th. The day before that, one of the big mutual funds that we track as part of our IBD mutual fund index, the T. Rowe Price New Horizons Fund, a fantastic fund. It's, you look at their top holdings, very similar to the things that we invest in personally on Leaderboard. You'll see them in the IBD 50. So back in October 3rd, in fact, T. Rowe New Horizons was up 21.8%. And this is a diversified mutual fund. And if you're, following the CanSlim style, you're going to be in very similar stocks, but more concentrated. So even with a diversified mutual fund in leading growth stocks, T. Rowe went from up 21%, and by the bottom of the market, it was down 3%. So, put all that together, that was almost 24 percentage points of lost performance in just under 3 months. This is something that you do not want to try to sit through. With a diversified fund, it'll bounce back, everything's cool. But if you're trading 6, 8, 10, even 12 stocks, maybe 15, you can take really bad hits to your portfolio. You'll become, lose your confidence. And so that's why it's so important to stay in sync with the trend. So when we had that big undercut of the 50-day, we put the market under pressure immediately. We had already been, reducing exposure at that point. The market is coming down. And then the day after Christmas, we got a nice gift. That's that big blue up day, a day after the ultimate bottom. And now the new uptrend was confirmed a few days later on the 4th. And since then, it's been a nice run this year. But we've also had a fairly painful market correction of 10% in the NASDAQ. And a lot of stocks are bouncing back nicely because we had a follow through last week, or actually the week before, isn't it? Mm-hmm. And so today, the market's acting well. And again, I guess my biggest issue with the current market, Ken, is that it's so headline driven. So this morning it was Draghi, right, saying, yeah, maybe we're open to stimulus in Europe. That got the market going. And then news came out that Trump and Xi are probably going to have an extended meeting next week at the G20 summit. So again, the trade war is the biggest factor hanging over this market. It really, and again, it is headline driven. It's not something big that is unto itself. Like, for example, back in October, what was kicking off that correction were that companies started reporting earnings at the beginning of the third quarter earnings season. And a lot of them started saying, fourth quarter isn't going to be so great as far as earnings. Next year's earnings aren't going to be so great. And so that really hit the market hard. And that's not something that you can turn around on a dime. I mean, that's got to play out. This has been the issue with what we're dealing with right now is it could be resolved tomorrow, next week, or 3 months, or maybe never. We don't know. And that's kind of a tough way to deal with the market. But at the end of the day, you got to respect the trend. And right now we're in an uptrend and stocks are breaking out, and there's a lot of buys out there.
Yeah, and the thing to also remember here is that good high quality growth stocks are typically going to really outperform during market uptrends, and when the market starts to fall, they can lag more than the broad market. So anytime you see the big picture market outlook go to market uptrend under pressure, and again that happened in early October, that was because of pretty pronounced signs of institutional selling, distribution days in the major stock indexes. So be sure you're reading the big picture column every day to understand what distribution days are doing to the market, what the price action in leading growth stocks is, and but the market pullback that started in the second half of last year was just textbook. It started with waves of institutional selling, and then that institutional selling really accelerated. Again, as Chris pointed out, when the NASDAQ undercut its 200-day moving average, that's where we went to a correction, and then the bottom was put in, just like we've seen market bottoms put in the past in early January, and we just saw a recent follow-through day that we're definitely giving the benefit of the doubt for now.
So let's move on.
So when we have a correction, what should be our strategies? When we see the market go into under pressure and into correction, what should we do? How should we react? Well, the first thing would be to reduce exposure.
Yeah, absolutely, because you're paying attention to what institutions are doing in the marketplace, and when you're starting to see signs that they're liquidating stock, taking profits, you need to stay with the trend, because again, when growth stocks they can materially outperform during market uptrends, but during the early stages of a market pullback, they really can start to lag, and if you're not careful, it can do damage to a portfolio. So, leaderboard, when the market started pulling back last year, this was in early October, I believe it was, we were in the market, 87.1% invested, but then again, the market outlook shifted in the big picture to uptrend under pressure and then market in correction. So we went from an 87.1% invested to 36.4% invested when the market went into a correction. So we were fairly well positioned there. And then the selling really started to accelerate into the end of the year. And again, back at this time, earnings season was definitely a problem for the market. But the market was also worried about a Fed that was sometimes sounding hawkish, and there was a possibility that rates were going to be headed higher this year. And of course, that narrative has really changed. Okay, and then so the sell-off was going on, but then we saw 3 straight up days in a row for the NASDAQ. It was up. This was in late October, 3 days in a row, up 1.6%, 2%, 1.75%, and we needed to get exposure. Now the NASDAQ was still underneath its 200-day moving average, but we increased our exposure to 72.3%. Again, staying moving with the market, going from a low percentage invested, increasing it back up to 72.3.
Trading with the trend, would you say?
Trading with the trend.
And then the trend turned against us.
Right. And the whole reason why we're moving with the trend is because you don't want to make all or nothing bets. It's very difficult to be, you might be right, spot on 1 or 2 times, but over the long run, maybe, you might be a little out of step. But the whole point is if you're moving with the market in the direction it's going, you're not going to be wrong for long.
So we went all the way down to 11% invested, and then we're going to get into the logistics or what the follow-through day looked like in a bit. But we went from 11.1% invested all the way up to 108.6. So we were on margin, and this was by April. And there were a lot of stocks that came out at the follow-through day in early January, and we'll go over some of those stocks. But the market was telling us to get back into the market. We went from very light exposure to the market to 108.6% invested, and again, this was around April. And then again, we started to see a cluster of distribution days in early May. That caused us to play defense. We started to lessen our exposure down to 66% invested. And then market continued to sell off. So we were about 35.6% invested at the recent lows. And then of course we had a nice recent follow-through day for the NASDAQ, and we are back to being fully invested at this point, nearly.
The key is to be nimble, right?
Mm-hmm.
So the second point would be to take defensive positions.
That's right. So Starbucks, we were in the throes of a market correction. This was back in November. We certainly did not have a follow-through day, but we noticed that Starbucks was acting very well. So we actually added Starbucks. Now, this is not a high-octane growth stock, but it is a company with outstanding fundamentals, and it was really showed a nice gap up out of a long consolidation. So we added Starbucks in early November. We were able to hold this one for a little while, eventually exited the position on March 8th for a nice gain. But again, just because the market is in a correction doesn't mean that we're going to just stop looking for stocks. We always want to see what is holding up well, and Starbucks definitely fit the bill in early November. It was a nice gap up on earnings.
Yeah, and the thing to also note, that blue squiggly line there, that's the relative strength line, and that shows you how a stock is performing in relation to the S&P 500. And so even you see the annotation erases all gains from buy point. So even though it round trip from where we got in, the RS line was actually higher than where we got in. So on a relative basis, we were actually doing better than the market with this stock, even though it wasn't working exactly how we planned. But that's the whole point with defensive positions, that you want some, you rarely ever want to be 0% invested. You want to have a little bit of money in the market to see what's going on. It keeps you really focused. And if you can find, every now and then you can latch onto a stock that will be outperforming during a bear market, and ideally, gaining. But in this case, at least it was outperforming the the S&P. And so it was actually helping us vis-a-vis the S&P during that point.
Dottie is asking, how do you define a defensive position?
So a defensive position is something, sometimes utilities can be defensive. Bigger blue chips like Verizon or Comcast, AT&T, some of these things that are not as economically sensitive to what's going on. And Starbucks is a lot like that too, because it doesn't matter if growth stocks are getting nailed. People are still going in and buying coffee, plus they're making sales all over the world. Just because our market might be in a correction doesn't mean it's going the same way everywhere else.
So step 3 is to hedge with ETFs. What does that mean?
Well, this is kind of a new thing. I've actually used ETFs for a long time, trading on the upside, and then also using them to hedge individual positions, or actually using options to hedge individual positions, but using ETFs to hedge portfolios. So, and we recently introduced this to Leaderboard, and so this is SQQQ, and this is the triple short NASDAQ 100. And the reason why I like triple leverage ETFs is because they actually move similar to what a stock does. So you can get a lot of exposure. You don't have to use a lot of capital. They're not for long-term use, but really for shorter-term trends. And so we got into this when the market was selling off, and I think on the day that it had gapped below the 50-day recently. And so we had been reducing exposure, but we kind of wanted to neutralize the portfolio. So we took a full position in SQQQ. And so the logic of this is twofold. One, if you can neutralize your portfolio, maintain your gains while the S&P and the other indexes are going down, that's great. So you're gaining on a relative basis. And then the other thing is, you never know how long the correction is going to last. You don't want to just blow out of all your positions, especially the ones that might be some big winners. And so this gives you the ability to kind of set with some of your higher conviction stocks, but you're not necessarily taking as much hit from holding them. And so what happened with this is, as the correction progressed, it gained close to 18-20% for us, and then it started coming back. Now, we probably could have removed it a little bit earlier, but once we got the follow through, we took it off, and it was probably more or less a flat trade, but it really did do its job in just helping us navigate the correction, because we didn't know at the time, was this, now it seems obvious, oh, well, this is just a 10% correction. The way the correction started, it had the feeling and look of how the correction in October started. But going back to what I was saying earlier, this is a headline-driven market. It's moving on, Trump's latest tweet, and I guess whatever Draghi's saying as well. So, but this is, an interesting way that you can hold on to some key positions. I mean, if you've got stocks that are breaking down, get rid of them. But if things are holding above their 50-day and acting right, and it's still in the early part of a correction, this is a way where you can stick with some stocks, hedge it with an ETF, and ride out the ugliness in the market.
Yeah, and the market told us that the timing of our buy here was right, and we actually, like Chris said, achieved a nice double-digit gain after adding SQQ. And just because it started to pull back 2-3 days in a row, we still were in a position where we wanted to give this trade room to work, and we knew we were going to run the risk of maybe surrendering a gain, and it started to bleed and come off its highs. And then when it became clear that it came down to its 50-day moving average, really didn't make a conviction bounce. We thought that the market was in position possibly to rally. We cut it loose. But again, the timing was right on this trade. We did cut the position in half, but then took it rallied nicely after it was added.
So I see we got a question from Christopher Chase. What position size for an ETF like SQQ? And really the way to look at it is you need to look at your portfolio, and let's say on a day that you're looking to add SQQQ or maybe some other inverse fund, but I like this one. Just see, first you want to say, do I want a full hedge on my portfolio? Do I want a half hedge? So if your portfolio is down 3 or 4% on the day, something like that, which is not unusual on a really big down day, take a look at how much SQQ is up. And then given how much it's up and how much exposure you have, it's just a math problem. You look at it and say, if I had this many shares, would I offset half of my loss, all of my loss? Are you feeling really bearish at that point and you want to be net bearish? And so it's really up to you about what your outlook for the market is and how aggressive you want to be.
All right, let's talk about an uptrend. Enough about corrections, enough about bad news. When we have an uptrend,
good news.
We just had a fall through day. What should our strategies be? How should we react?
Okay, well, we're going to look for a follow-through day. We're going to look for a sign of strength by at least one index. We're going to look for signs that new institutional money is coming in from the sidelines. And again, the bottom that we saw in early January was textbook. We got our follow-through day on the 7th day of the rally attempt on January 4th. In a little bit, Chris is going to get into another leveraged ETF that we used in the early stages of this uptrend. But it was really a textbook follow-through day that really yielded a lot of emerging leaders. So again, it was textbook. It happened on the 7th day of the rally attempt, a big percentage gain for the NASDAQ, up 4.3% on the follow-through day. So remember, in How to Make Money in Stocks, Bill says that follow-through days should not be begrudging and on the fence. This was a powerful follow-through day. It really made us feel comfortable that after a really sharp pullback in late 2018 for the stock market, there was a good shakeout, and we had a good idea there were going to be plenty of emerging leaders to be had right around this follow-through day. So it was just a good bullish performance for the NASDAQ on January 4th.
So we see a big up. We see the follow-through day. The next step is to look to leverage a long ETF.
Right. So again, I'm a big fan of ETFs to trade sector trends, but also to take advantage of market turns. Because one thing, especially if you're investing can slim style and you see the market rallying, and then you're waiting for the follow through, and then you're waiting for stocks to break out, you'll often, lag the broad market for maybe sometimes a couple months before your stocks really start working. So we wanted to kind of speed up that process. And so when we saw the market rebound so strongly the day after Christmas, that kind of got our attention. And the next day, it opened and pulled back, but then, later in the day, it was running higher. And so when it took out the high of the prior day, we kicked in a double position.
December 27th.
Yeah, December 27th of UPRO. So essentially with that, we had 60% exposure to the market just with this one ETF, vis-a-vis the S&P 500. And the whole idea about it was, okay, we've got a few stocks on here. We want to be very choosy about the stocks that we put on and not just like grabbing the first things that pop up because we're feeling, oh, we got to get that exposure. We need to be back in the market. So it allows you to be more discerning and really look for those leaders where the RS line is at new highs and they've got great earnings growth and there's something new going on. So,
but in the meantime, we get to participate.
Yeah, we're participating, and we're riding up with the market. And this is something that we held for quite a long time.
Step 3, to initiate positions in stocks showing actionable bases. And this is what leaderboard's all about, right, Ken?
Yeah, this was really exciting. Again, we had reason to believe that the follow-through day was gonna work. I mean, we didn't know for sure, but it was definitely a really strong showing for the NASDAQ. And you can see some of the ticker symbols that we put in here, some names that were added to leaderboard either right around the follow-through day or a week, 2, 3 weeks after the follow-through day. So, the common bond among a lot of these stocks is that they, remain market leaders today. Viva Systems, cloud software firm, Atlassian, another enterprise software firm. MasterCard was added in late January. That continues to be in the leaderboard portfolio. So, anytime we add a stock to the leaders list, the goal is to hold it, for a long-term gain. Sometimes the market is not going to let us do that. There are going to be, situations where we take a 20% gain. We did that with TransDigm Group, another ticker symbol you see there. That was added soon after the follow-through day. So, you can see just a lot of kind of a who's who of market leaders here, names that joined leaderboard right after the follow-through day. And, again, it was not only was the follow-through day picture perfect in terms of the percentage gain and when it happened in the rally attempt, but a lot of great stocks were coming out of bases, which is just what you'd expect after a follow-through day.
Nikolai says, are we only adding growth stocks to leaderboard?
Generally, yeah, that's what we're really focused on. I mean, we'll look at some turnarounds, like CMG was a turnaround at Chipotle Mexican Grill. So maybe the numbers weren't all that great at the time, but there was a new CEO and they were executing on their plan. But generally, yeah, we're looking for turnarounds, growth plays, and really looking for the leaders. And I'll tell you the way. If for those of you who have MarketSmith, the easiest way is to go into the Growth 250 and look for stocks with the RS line at new high. That is the best way to build a watch list during a market correction. You can do it by looking through the IBD 50 and the Big Cap 20 and all the IBD stock lists, but you're going to have to do a little more work and look at that RS line. But I'll tell you, that's how we got a lot of these stocks on our radar, just by looking for which ones had the RS lines.
Or you could take leaderboard, we'll do the work for you.
That's true.
Yeah, so growth stocks, absolutely top-rated growth stocks with outstanding fundamentals that are showing relative price strength. There are industry group leaders. These are the stocks that have the best chance of materially outperforming the market in the early stages of a new uptrend. And again, the common bond among a lot of the ticker symbols you see here, PayPal, CyberArk, probably the leader right now in the security software group. A lot of these stocks, we know what the blueprint for a winning stock looks like. Outstanding fundamentals, they're strong price performers in their industry group, and again, a lot of these stocks remain market leaders right now.
Let's look at a couple close ones in detail. The first one, XLNX.
Yeah, Xilinx. This was really a big winner for us. This was added on January 24th. So again, we had that follow-through day in early January. You want to be looking for stocks to buy on or around a follow-through day, but remember that leading stocks can come out 2-3 weeks after the follow-through day. So Xilinx, a perfect example. It was added as a half position on January 24th. A really strong earnings report, gap up out of a long consolidation. One of many examples where a stock that gaps up out of a consolidation. It is so counterintuitive buying a stock when it's up 10, 12, 15% and it's gapping over a buy point. But time and time again, it has shown to be a good entry in a stock. And Xilinx was a perfect example. We bought it on the gap up and look what it did from there. It went on a huge gain. We actually, this stayed a half position. We just never really felt like we had an opportunity to make it full. So we stuck with the half position, got out of the position on April 25th when it was removed from leaderboard on that decisive break of the 50-day moving average. And this was right around the time the Philadelphia Semiconductor Index hadn't rolled over yet, but a couple of weeks after Xilinx took out this key support level, semiconductor stocks rolled over in spades. So this one, I think was handled pretty well. We scored a really, really nice gain. We gave back some of that gain when it gapped below the 50-day moving average, but it was an unequivocal sell signal, and we really weren't getting sell signals before the gap, below the 50-day moving average. So
it continued to go lower.
Yeah.
It's a good opportunity. People may not be familiar with the leaderboard chart looks like. You walk us through the blue and the red and the gray. What does this mean?
Okay, so up days are in blue, and each up day corresponds with a volume bar at the bottom. So, up days are in blue, and down days are in red. And then the annotations are going to, the blue annotations are going to just kind of show you where a stock is buyable, whether it's finding support at the 50-day moving average or on a weekly chart, the 10-week moving average. And the red annotations are simply sell signals. So,
and then the ones in gray are informational, just discussing something that's happening, but it's not necessarily a buy or a sell decision.
Information you should have if you own the stock.
Yep. Right.
One more, CyberArk.
Okay, well, CyberArk, this is a stock that caught our eyes. And you can see where it says added to leaderboard. It's kind of hidden by that second stage base annotation below the base, but you can see the RS line. And look at where when the base began, it was much lower. So this thing, by going sideways when the market was going down, that made the relative strength line soar. And so we were very confident when we put this on. We actually put it on early. We didn't wait till there was a little breakout within the base, and we put it on there. And so it ran up, and I think we got about a 30, actually maybe even more return on this thing, maybe close to a 50% return by the time we took off the last position on it. So a lot of times we'll start with a half position and then add to it if we get good price action, and then we'll scale out of a stock as well. So this is just a great example of we'll put things on if it's coming out of I think that was a second stage base. So maybe we could have held on to it, but it's really important, I think, that when you look at your portfolio and before the market gets into trouble, note on a chart, this is a high conviction stock. I'm going to try to hold this stock for whatever reason. And you put what your sell signal would be like. It would have to break the 10-week moving average in huge volume. And then other stocks, like I'll note it's a 20% or a 30%er, and I'll have kind of an idea that when it gets to this price level, I'm going to at least take partial profits, and maybe I'll let it run a little bit more. But you really do, I think, better in the market if you're taking at least some profits on the way up, rather than being fully invested or maybe heavily on margin, and then the market starts correcting, has a bad day, and you can really take some hard hits.
It really is interesting looking inside the security software group right now, because we added CyberArk in late January as it was breaking out, and it was a nice winner for us. But at one point it was Palo Alto Networks that was looking like a leader in this group. But it's just a good example of how new technologies, emerging leaders can sometimes supplant the old leaders in a group. And CyberArk and Zscaler look to be the cream of the crop right now in the security software group.
Let's take a closer look at Leaderboard and how it can help you identify these trends and take advantage of them. Quickly, Leaderboard was launched in 2011 after much demand from IBD subscribers. I've been here for 22 years, and I've been on the road for about 15 of them. And most of our customers believe in CanSlim. They know it works. They don't have the time. They know CanSlim can find the winners in the stock market, but they said, will you help us find the leading stocks and tell us when to buy them and when to sell them? And that was a big challenge, because we're not a broker-dealer. We're not making recommendations. But we came up with Leaderboard, and basically it's a committee of men and women who are going to help you identify these leading stocks and then tell you the optimal time to buy and the optimal time to sell. So you're getting expert advice from experienced CanSlim professionals on when to buy and when to sell. It's an incredibly powerful product. What makes it unique? Well, we know our screens. They take 8,000 stocks, you put them through the CanSlim filters, and it gives you our stock list. Our stock lists in IBD are fantastic. The IBD 50, the Big Cap 20, they have very, very strong performances. But they will miss some stocks because they have very stringent criteria. For example, the return on equity criteria is 17% to qualify for most of these screens. They're all computer driven. What we're going to do with Leaderboard is substitute some of that computer generated output with some professional exceptions. So if you have a lot of experience, like the people on the committee, they're going to say, listen, I know the ROE is 15.2, but it has X, X, and Y, and they're going to substitute their judgment for it. So you're going to see a lot of stocks on Leaderboard that may not have all of the CanSlim criteria, but have a lot of potential. So let's talk about the committee.
Sure. So the market team, there's a subgroup on the market team that really has primary responsibility for Leaderboard. We all sit near each other out in our newsroom, and especially in the morning when things are happening, we're trading ideas, just alerting each other to opportunities or things we need to watch out for. But what goes along with that is we'll talk about stocks we like. There'll be some debate. Maybe I'll say, well, find out about this. and maybe David Chung might go out and do some research and come back with a report. The other nice thing is we have a team of reporters here, and so if we really don't know about a stock, we'll assign a story and kind of get the base outline of what's going on there. So it's a real interactive process. You know, no one rolls over the other person. Everyone is challenging. And at the end of the day, I think having a small group, checking each other, bringing ideas, debating ideas really makes a difference. And especially when it comes to making sell decisions too. You know, one person might be freezing up and like, I don't know about this. And then we've got 2 or 3 others who are saying, you know what, we really need to reduce exposure here. And so we kind of, I mean, we'll still make mistakes, don't get me wrong. But like we were saying earlier, we're never going to get that far from the trend in the market because we're really looking out for each other and calling each other out if someone's getting maybe a little too bullish, a little too bearish, and it works well.
Yeah, and the only thing I would add to that is that, you know, if I bring up an idea and I'm pounding the table on a stock about why it should be considered for leaderboard, when you have 2 or 3 extra sets of eyes, you know, there's always something that pops up that can be questioned, and, you know, the healthy debate that goes on. I mean, we can all identify a stock that's got tremendous potential. We, you know, our ratings, the composite rating and the earnings per share, all these ratings can help you, you know, identify the right stocks. And we're all pretty knowledgeable on what a healthy technical picture looks like. But, you know, the constant discussion of ideas, and, you know, again, I may see something in a stock that is not seen by another person. So every stock is fully vetted. And like Chris said, you know, we're not going to be right, you know, all the time. Some stocks aren't going to do what we expected them to do, but
and that's the nature of investing.
And that's the nature of investing. But we can really pick apart a stock and you know, come to a well-informed decision.
And I think like the average tenure here is probably 20 years. A lot of us are now
at least
been here longer than 20 years. So when we're looking for stocks, I mean, we're doing the CanSlim screens, the IBD 50 sector leaders. We use Growth 250 quite a bit. We run our own custom screens. Just you know, each of us have little special things. Like right now, I'm really hot on sales growth, especially with all these IPOs coming to market that aren't profitable, but we're, you know, Beyond Meat, Zoom, the one that came out last. CrowdStrike,
which is up huge again today.
Yeah. So, you know, those are really catching my attention because they've got great sales growth. And then what we were referring to a little bit, you know, personal research. You know, if we have questions about a stock, someone's going to go out, listen to an earnings conference call, read a transcript, call an analyst, get some insight on what's going on, or download a report. And like I said, we'll even assign stories on things so we can just get the understanding of what's going on. And ultimately, what we're looking for, is there something new going on in the stock? Whether there's been a change in management, there's something happening in the industry, but that's really ultimately what we're trying to look for, is understand the story. Because it's pretty easy to look at the numbers and say, wow, this is pretty impressive. They're falling a little short here. Let's dive into it a little deeper. And that's really what we're looking for, is the new, the N in CanSlim.
Yeah, I think any time you go through the leaders list, if we're in a market correction and there may only be 4 or 5 names on there, or we could be in a confirmed uptrend like we are now and we've got 11 names, I think, you know, the vast majority of leaders are always going to have something, you know, new going on, whether it's a new condition in its industry group or new management, like Chris said. So never underestimate the importance of new. New is what is really driving earnings and sales growth, and is very compelling.
So here's what the product looks like. It's very simple. We'll do a brief tour. So what the committee does is they put stocks on what they call the leaders list. And leaders list has a couple different versions, or a couple different subsets. The first one's called Leaders Near a Buy Point. Now, ladies and gentlemen, what more do you want? These are hand-selected stocks by Canson professionals that are at an actionable point. We're going to give you the exact buy point down to the penny and tell you if you like the stock, if you like what you're seeing, and you want to buy it, here is the safest place to buy it based on CanSlam. They're going to give you the current action, what the stock is doing currently. They're going to do some leaderboard analysis. What's that?
Leaderboard analysis is just really dissecting the chart, taking a look at the latest breakout. Were there signs of accumulation in the base as the stock was or ahead of the breakout? So it's really just kind of a quick, succinct analysis of the chart.
What the committee thinks of it, essentially. Yeah. And backstory. This is something that's big. Bill O'Neill used to roam the halls here and stop you and ask you what you owned. And you had to have a reason why. And Investors Business Daily, you don't buy a ticker symbol. You don't buy Amazon because you bought a product from one company. You have to know what they do. So we do a backstory. This is one of my favorite things about Leaderboard. It's going to give you in a couple of sentences why out of 8,000 stocks we picked this one. What made it unique? What makes it different? What does the company do? And more importantly, probably, they give you recent articles in Investors Business Daily about the company. So if you like what you're seeing, you like what you're reading, read some more recent articles and get to know what you're buying so you're not just buying a ticker symbol.
And I just want to mention one more thing about the leaders near a buy point section. Just because a stock is in this area, leaders near a buy point, does not mean it is actionable now. There are some stocks that break out. They may fall in light volume and maybe come back to the buy point and actually fall below the buy point. In that case, we really want to wait and see the stock retake the entry. So just because a stock is in the leaders near a buy point section doesn't mean it's actionable. It just means it's within 5% of a buy point, either on the upside or the downside. So if a stock is still within the 5% buy zone, pulling back in light volume, yeah, that would be actionable. But a stock that gives up the buy point in heavy volume, even though it's only 1 or 2% below the buy point, it's still going to be in that section, but not actionable because it needs to reclaim the buy point, preferably in heavy volume.
The second subset is called leaders. This is the same level of quality as leaders in our buy points, but these ones are maybe past their buy point or stocks you can't take action on immediately.
A lot of extended stocks are here. So we like to see this section filled with stocks because it shows us that we've had a lot of recent additions whose breakouts are working and they have gone past the 5% buy point. So this is just a subset of the leaders list that shows stocks that are basically extended past the buy zone, and we'll look for alternate areas, maybe a pullback to the 10-week moving average, a 3 weeks tight pattern, something like that.
But these should be on our radar at all times, right?
Oh, yeah.
And what happens if they present a new buy point?
If they present a new buy point, they'll move back up to the leaders near a buy point list, and so you see movement back and forth between leaders near a buy point and leaders. But in this section that we're talking about right now, this is stocks that have just moved past the 5% buy zone. We still like them a lot. The breakouts are working. We're just going to wait and see what a pullback looks like and see if we can get an alternate entry.
A reasonably recent addition is earnings options. Can you write an article on the earnings options? You want to address this?
Yeah, you can access it at the homepage of investors.com up on the research tab, and just go to click on earnings preview, and you have a whole list of stories that have been published here. So what we do is we basically look at upcoming earnings reports, and we look at possible option trades, bullish option trades. For a stock to be mentioned, it needs to be in a good technical setup. It's got to be forming a healthy base. Maybe it's finding support at its 10-week moving average. So we are totally open to looking at call options around earnings, but it's got to be a technically healthy stock. We're not looking at stocks in downtrends.
Yeah, and I guess the important thing is you should use these options sparingly. It's usually when we're looking at stocks building first or second stage bases, we're very bullish about their prospects. We really want to get a jump on them, and we have a strong feeling that they're going to beat and really jump up. And now, if you're uncomfortable with options, you can always buy gaps. But it sure is nice when you can, buy an option. Your downside risk is capped. There's no way if the stock ends up gapping down 10 or 20%, if you're only on the hook for, let's say, the equivalent of 3-4% of the stock price, that's as much as you're going to lose, is the value of the option. On the upside, you're going to get a lot of profit, right out of the gate, and it really makes it easy to start building a position. So you have your option position that's now in the money. Maybe you buy a little bit on the gap. Maybe you buy later in the week if it's still holding up. It's just that process of moving into a stock very focused and with a purpose.
The final section is the watch list. This is stocks that are not on leaderboard, but we're keeping an eye on.
Yeah, exactly. So, in a healthy market like we're in right now, I think we've got 4 names on our watch list right now, stocks that we're looking at for possible inclusion on leaderboard. I think just today we're still seeing strength in defense stocks, and we thought the price action in TransDigm Group was encouraging today, so that joined the leaders watch list. But we're basically just looking for setups here, stocks that are leaderboard material that are setting up, and we want to let people know about them and be ready to act if a breakout does come to fruition. So, like I said, we've got 4 names on the watch list right now. That list could get bigger. It just really depends on what the market is, telling us to add.
Yeah, and it's always good that you do your analysis ahead of the breakout. So when the breakout happens, you can act with certainty when things are going on. You're not scrambling around trying to say, is this really good? So once we put it on a watch list, we're pretty pretty confident that we want to own this stock, and that on a solid breakout, we're going to be adding it.
The next tab is the market. This is probably one of the most important tabs in leaderboard. Just walk us through the market.
Well, as we started off with this presentation, we were talking about how important the market trend is, and everything about what we do, whether it's in the big picture or just tracking the different updates of the stock market today. I mean, we're really trying to first and foremost understand the market trend and let you know where we are in it, and whether we're in a confirmed uptrend, the uptrend's under pressure, or we're in a correction, and then act on it. So this is, we like to say the last letter in CAN-SLIM is market, but it's really the most important and the place that you should start when you're analyzing things.
We also offer 3 of our top performing lists if you're a leaderboard subscriber. You get the sector leaders, the IBD 50, and the stock spotlight. But what's different is every stock on the sector leaders and the top 10 of the IBD 50 will all be annotated like the stocks you've seen.
Yeah, so you're going to see the buy points, the pullbacks, the sell points, and any other activity that's going on. We're tracking these stocks every day.
Yeah, I think it's fair to say, too, that we're doing most of our fishing. I mean, we've got a lot of stock screens that, we each individually use, but the Market Smith Growth 50, Growth 250, the IBD 50, and sector leaders are 3 main areas where we do our fishing. And, I know we all use the Market Smith Growth 250 here, and what's great, once that screen kicks in just after the open, you can sort 250 stocks by volume percent change, by price percentage change. And you can see which stocks are moving the most just after the open, and you can find a lot of often find a lot of actionable stocks there.
The next tab is the stocks added and removed. This is a recent addition. People wanted to know, customers said, when were stocks added on leaderboard, when were they cut from leaderboard, when were they added to the top 10, removed from the top 10. So they've got a running list of all the stocks that were added and removed. We've got a My Stock List section. You can build your own portfolio, several different portfolios here, and keep an eye on them. And finally, we have a very robust alert system. This is complicated. We don't have time to talk about it now. If you have questions on leaderboard or alerts, you can give us a call here at IBD and schedule some time with a coach. We can walk you through the product, how to do some alerts, but just know we have a very robust alert system. Charts. This is probably the most important part of leaderboard. On every leaderboard chart, whether it's covered in the leaderboard section or not, there's going to be an IBD stock checklist on the left-hand side. And this is going to have 29 key data points, all CAN-SLIM related, broken down by the market, fundamentals, and technical characteristics. And next to every characteristic is going to have a little bubble. If it's a green bubble, it passes the criteria. A yellow bubble is on the fence, and red, it fails. So at a glance, every stock in the database, you can pull it up in leaderboard and say, hey, how does this rate up versus our CAN-SLIM parameters? If you don't know what those parameters are, click on the parameter. It'll give you a definition of what it is and why it's important. So it's on every leaderboard chart, you're going to see on the left-hand side what they call the stock checklist with our pass and fail indicators. The weekly chart. Here's the weekly chart of Amazon. You can see it's heavily annotated. What do we learn from the weekly chart, gentlemen?
Well, you're going to see bases. You're going to see entry points, exit points. A lot of similar things you'll see on the daily, but you're definitely going to, this is where we annotate where stocks enter and exit leaderboard.
If I could just also say one thing about the IBD stock checklist that you just went over. It is very powerful to be able to do all of your fundamental and technical research in one place. You know, there's a lot of services out there that offer, you know, technical analysis, and you can do fundamental analysis elsewhere. But, you know, you can really get a complete picture of a stock with leaderboard, a lot of fundamental information about the company, and of course the leaderboard charts that are annotating buy points and a lot of technical analysis teaching as well. And what about the daily?
The daily, you're going to see more shorter term observations, and also sometimes the charts can look different on the daily. Sometimes you'll get different patterns appearing on the daily. And you'll also get the exact buy points and sell points there.
This is the biggest question. We've got probably 50 questions. Okay, great, guys. Does this thing even work? Well, in Q1, the S&P was up 13% and leaderboard was up 22%. We're talking about a significant outperformance to the tune of almost 73%.
And that's on top of 2018, where we ended the year up almost 12%. I think the S&P was down about 6.5%. So that was that was gratifying to really outperform in a very tough market when, as we noted, a lot of funds and all sorts of money managers were really having a tough time in that fourth quarter.
A couple of stocks to watch.
So the first one is Etsy. This is one that we put on leaderboard just the other day. And actually we were, looking at kind of an aggressive buy point, kind of a double bottom pattern there. And it had rallied nicely off the bottom, really about 15% in just a few days. And so what's happened since then is it's pulled back. It's down a little bit more today. It's actually probably right around the 10-day moving average, which is at the green line that you see on your chart. And so what it looks to be doing right now is building, probably another handle. And so when it takes out that one that's up above the 70.19 buy point, probably around 72 or something like that, then, that would be another place where we might, especially if there's good volume, that we would add another half position. So this one is still one to watch. It had, like I said, it had a big move off the bottom, and it's been consolidating. And Etsy was one of the big winners we had last year. Just a note of caution: it can be a wild stock. This is probably, even though I think it reset its base count, but the fact that, it's been around a while, this is one that I would be targeting like a 20% gain. I would be surprised if this runs up 100% from here. This is a more mature growth stock.
It's really proven itself a well-run company. Very few blips from a fundamental standpoint. Really consistent track record of earnings and sales growth. Good management team. This was added last week when it broke out over a trend line, and then Friday was actually very encouraging price action when it went over 70, and but then it closed near its low for the day, right around 70, and there's been a little selling pressure since then. But we're going to still give this one room to work. There's a very compelling fundamental story, and it really just has a lot of qualities that we like to see in a stock. But as Chris said, it can be volatile.
The next one is ServiceNow, and this is a stock that we've had on quite a while, and we got it on the gap up, I believe, and we've had a full position, took a half off, and added it back on. So I think we're back at a full, right?
Yes, yeah, we just increased it to full on a good solid breakout today from the latest base. So, one of many leaders in the enterprise software group, and that frankly is one encouraging thing about the latest follow through day that we got. If you're looking for leading stocks breaking down and showing very weak technicals, you're really not seeing it in the enterprise software group. You're seeing names like ServiceNow breaking out, and plenty of other enterprise software stocks finding support.
Yeah, CyberArk is right near a possible breakout.
Yeah.
So lots of, the leaders are still leading.
Last one, Lulu.
Yeah, so Lululemon, this was interesting. This was actually on the watch list last week ahead of earnings. We were looking at it as a possible option trade, but we wanted to see how the stock was going to react on earnings. And we did not move it from the watch list to the leaders list last week because it went over 180, and then sellers came in, and it managed a very small gain late last week. And but we were encouraged to see the stock reclaim the buy point, and this was a very new half position that was made full because it reclaimed the 179.60 buy point, and it is hitting a new high today as well.
Yeah, the other thing is with the action of it taking out the high of the earnings day, that's where it opened strong and then reversed. To me, that's always, if the stock can come back from negative action on earnings and quickly take out that high, that's a big sign that it's got some strength. And that was one of the reasons that we went full on it so quickly.
And again, a company that's been around for a while, but so much new going on, it's hard to keep track. They're still innovating. In fact, today they just announced a line of personal care products. They're doing well in menswear. Very outstanding management team here that is, it's got the new going on in spades.
Before we get to Q&A, we do want to mention you get a bonus download for attending today. This is a shortcut for using Leaderboard. It's a 3-step process. It's a free PDF. Go to investors.com/tradewiththetrend to get it now. Or this webinar will be archived within 24 hours. We'll send an email out to everyone who registered, and it will be an attachment in that email. So once again, you will get the bonus download that tells you how to use a shortcut with Leaderboard. And for those who aren't subscribers, we have a special offer. It's 1 month for $29. $29 to access all of this powerful information you've heard. And because it's open access week, we'll add an extra week. So basically, it's 5 weeks for $29. If you have any interest, give us a call, 800-831-2525, or go directly to investors.com/webinar offer to take advantage of 5 weeks for $29. All right, gentlemen, we have time for some questions. We are being flooded. Well, one of the biggest ones is MarketSmith versus Leaderboard versus Swing Trader. What are the differences?
Okay, well, MarketSmith is really if you want to roll up your sleeves, dive in, and do all the work yourself. Leaderboard, you may still want to do a lot of work, but if you're looking for some guidance and just really real-time education, that's what the annotations in the chart end up being. We're telling you as things unfold, what's our take on it, what's our take on the market, and really it gives you a lot of insight on how to manage a portfolio, because it's one thing to pick one stock, but another thing when you've got 10 stocks and you're going into a correction, what do you do? And you can see how we handle that. Now, Swing Trader, very similar in the fact that we're, helping out and doing the search for you. But if you're more of a person who just wants to trade more quickly and reduce your market exposure and looking for gains of 5 or 10%, that's really good. The great thing about Swing Trader is when the market starts rolling over, we're almost always already out of the market because we've taken profits on the way up, and now there are no new setups to take. And so in the correction in October, we were essentially out of the market when the correction began. And this latest correction, we were out of the market before it started. So it's often a really good market timing tool as well.
Jonathan, also want to give a shout out to the Leaderboard app, which recently launched. So people signing up for the 1 month for $29, you can go to the App Store and check out the leaderboard.
The Apple App Store.
The
It's
Apple.
very, very easy to use. Yeah, so that's a recent open. So if you are during open access, you want to take advantage of the mobile access, please don't download our leaderboard app at the Apple Store. See any other questions? Talk to me about position sizes. A lot of people are saying, okay, I've got $500,000. How many positions should I have? And should I buy every stock on leaderboard? What do you recommend? A lot of questions on positions.
Well, position sizing is really a function of your own bullishness, your skill level, how concentrated you want to be. So generally on leaderboard, we are fully invested with 8 positions. So that, I guess that works out to about what, 12.5% position size. And also sometimes we may have more stocks on there because we're doing a lot of half positions, and then we're looking to add. And with so many stocks gapping out, it's sometimes hard to go with a full position on a day when a stock is gapped up 10 or 15%. So we'll put on a half, and then we'll wait for a pullback or maybe a flat base, something like that. So that's why sometimes we'll have more stocks on there than 8. But it really is a personal, how comfortable do you feel? I know some people, if I'm very bullish, I know this person, if I'm very bullish, I feel pretty comfortable with a 15% position. And, you can, one thing that we do, or at least I do now with my own personal trading, I kind of take the swing trading approach. I look at a chart and say, okay, the market's in a confirmed uptrend. I'm generally going to risk 1% of my portfolio on each trade. So let's say you're trading with a $100,000 portfolio. That means $1,000 you're willing to risk on a trade. So you then look at the stock and say, okay, if it undercuts, the low of the breakout day, I'll probably get out there. And then you just figure, how much is that percentage loss? If it's 5%, something like that, you just take $1,000, divide by 5, and I think that gives you probably $20,000 of coverage. So that would be a 20% position. Maybe you're comfortable with that, maybe not. Maybe you trim it down to 15%. But you can really, if you start off with how much do I want to risk on the trade, and then look at what where would my stop loss be if the stock sold off tomorrow, and then you can really understand how to size your position to the point where you feel comfortable with the stock, and you're not going to take a big hit to your portfolio if it doesn't work. But the opposite side is you want it big enough so if this stock does go on a run and get you 40 or 50%, or maybe turns into a really big winner, you want it to have a meaningful impact on your portfolio.
Yeah, and by and large, again, when a position is started on leaderboard, more often than not, it's a half position, because we want to make sure that our timing was right, and if we get a gain after that initial half position, then we will add to it and we will fill it out. But it is really a common mistake among a lot of investors not paying attention to position sizing, going in top heavy, suffering an unnecessarily high drawdown because you went in too much too quickly. So nibble to start. The market's going to tell you within a few days whether your timing was right, and if the stock continues to rise after you buy it, then you can think about adding to the position and making it full.
All right, the last question was on. We get a lot of questions on performance. What was last year? Last year, the leaderboard performance was 11.8% for leaderboard, while the S&P was down minus 6.2%. So last year they absolutely crushed it, and we talked about the first quarter this year. We were up 22.6. S&P was up 13.07. This is something that has consistently worked and worked well, and we want you to take advantage of it. So give us a call, 800-831-2525, or go to investor.com/webinar offer. Gentlemen, we're out of time. Thank you for taking the time this morning. I appreciate it. And hope you all enjoy Open Access Week. Thank you.